Hello everybody, welcome back to the series of equity research. So today we are starting again. We are in the continuation of fundamental analysis, and today we are going to study about cash flow statement. This is again within the financial statements, and today we are going to touch and we will gonna have a glimpse on the corporate management. How the management takes place within the company as well. That is also part of fundamental analysis. Means what is the governance structure within a company? That thing we are also going to touch a bit today because that is also very important for the equity research. So guys, let's start today's topic, that is cash flow statement. So before I start the cash flow statement, I want you to just have a look what and how the cash flow statement looks like. So the cash flow statement looks like, let's open a cash flow statement for Reliance, guys. Reliance. So this is the cash flow statement. When we click over here, so such kind of three-line statement would come. Just three-liner, nothing complicated. So over here you will be having, this is the number of years, right? And there are three columns over here. Number one, there are three rows over here. Number one is operating activity, the cash coming from the operating activity. So these are the numbers. Cash coming from investing activities. Okay, so these are the numbers. And the cash from the financing activities. So these are the numbers for this. Now over here, one thing we have to see, there is net cash flow. Now there is a negative sign and a positive sign over here. So what is the meaning of negative sign? And what do you mean by negative sign? Is it a good thing or bad thing for a company? So we will be learning this thing today, right? So this is cash flow. And if you ask me, sir, what is the benefit of cash flow statement? So cash flow statement is not a black and white statement, not a statement which will give you, something very concrete for equity research. It is an add-on with profit loss statement, add-on with, you can say, balance sheet for a better clarity. Means but if you alone see cash flow statement, it won't let you know many things, but it is just an add-on because in equity research, as you know, we have to combine ratios, we have to combine profit loss statements, balance sheets, we have to combine cash flow, then technical analysis, then mathematical models. So this is how the entire process goes on basically, right? Apart from this, we are going to see the corporate structure, means the governance structure within a company as well. Means what do you mean by this promoter shareholding, FIIs, DIIs, government and public? What is the meaning of this thing and what is the importance of these things in investments? So we have to see these things for equity research as well. So it is a combination of all the things. All right, guys. So let's begin with the cash flow statement. So as the name itself suggests you, it is something regarding to the cash, something regarding to cash, how the cash is flowing within a company, right? So there were three headings over there. That was operating activity, investing activity, and financing activity. Very interesting, guys. All the companies, all the businesses, they have some operations, their core operations, right? So activities, the cash which is involved in main operations, that is called as operating activities, right? These are the primary business operations. All right, I hope this is clear. Means if I am a teacher, so my primary activity is teaching. So whatever earning I am making from teaching, that is my operating activity. So if there is an automobile company, so that automobile company must be selling the cars. So whatever money they are generating only by selling cars, that is operating activity, right? So being a teacher, I could have multiple sources of income. That could be rental, that could be stock market, but those are not my operating activities. My operations are just teaching. This is the primary business. So positive sign means money is coming in, inflow. Negative means cash is getting reduced, so cash is moving out. So positive, cash is adding on. It's coming to me. Negative means there is a negative, cash is getting, subtracted from my accounts. So this is called as negative. Negative means outflow, positive means inflow. Now, next come investing activity. So guys, I am a teacher, I earn money from teaching, right? But I can earn money from other sources as well. That sources could be real estate, that sources could be crypto, that sources could be stock market. So I can invest money in these places. So if I invest, I get money from teaching, that is operating activity. But if I earn money from my investments like stock market, gold, real estate, so that is called as investments. So if I am giving money, if I am spending money to buy real estate, to buy stock market things, FD, RD, gold, so these are investments. So money is going out for investments, right? So it will be considered as negative. I hope this is clear to everybody. And if I am getting money, if I am receiving money from those investments, that will be positive inflow, but it is coming from investments. So if I am getting money from stock market, it means I might have sold some stocks. If I am getting money from real estate, it means I must have liquidified my real estate property. So it comes from disposal of assets, right? Those could be tangible assets, non-tangible assets as well. I hope this is clear to everybody. Now, it means investments negative sign also is not a bad thing. And positive sign is also not a bad thing. So we have to see which for which thing positive and negatives are good and bad. We are just going to see. But in here, over here in investments, if I'm investing in stock market, it's a good thing. If I'm liquidating some of my assets, that's also fine, nothing to worry about. But if I'm doing it in emergency, that could be an issue. Right now, financing activities. Financing means, guys, how I am financing my business. Right? It is about capital. So financing activity will involve, maybe it could be loans, debts, maybe it could be equity. Means to start a business or for the better execution of the business on day-to-day basis, how I am managing my finance. Am I taking some loans? Am I, using some borrowings or maybe borrowings from friends or maybe from bank? So if it is positive, right? So it means I am taking some money from somewhere. It could be from loan again, bank loan, it could be bonds, it could be equity as well. All the things which where from where I can take the money. And if it is negative, so it means I am repaying it back. It means I am repaying my interest towards loan, or it could also mean that I am re or I am repaying some kind of interest on the loan whatever I have taken, or I am repaying the bonds. So this is how these are three different headings. That is operating activities, investing activity, and financing activities. Operating means the main operation. Investing means if a company is investing some earnings somewhere or liquidifying their earnings. Financing means how the company is financing its business. I hope this is clear to everyone. Okay. Now again, we are going to go deep into this, guys. So let's have a small definition first. So operating activities are the cash flows from the primary business, right? It could be net income from the main important task or main important activities or primary business, whatever a company is doing, right? So cash received from customers means if I am selling something, so cash, whatever cash I will be receiving, that is operating activity. Investing is cash from the acquisition or disposal of the long-term assets. Maybe I am buying something or maybe I am selling my assets. So that is called as investing activities. It could be property, plant, sales of investments as well. So this is something which is which are the these are the investments made by the company or liquidation of the investments. Financing activities are the cash from the transactions, from the company's owner or the creditors. It is how I am managing my, finances for my company. It could be debt, it could be dividend. Dividend also very important, comes under this. We are going to see this in the practical part. Now coming to the more easy and more, practical aspect of this. Now, operating activities are all the activities of normal operations. Let's take an example of an automobile company. So for automobile company, I am selling the cars. So if I sell a car, I will earn something. So revenues from the sales of car, so it is in green. So I am receiving it. So it will be a positive thing. So on contrary, I have to pay some raw material, steel, maybe rubber, or maybe something like that. I have to pay salary to the employees. I have to pay for the for the transportation of for my business, for my cars. Means if I have to sell it in from Maharashtra to Himachal, I have to send the cars to there. So these are my expenses. So all the things that is going out of my pocket, but for the manufacturing or for the selling of the cars, main operation, the primary operation, that is, these are mentioned in red color, means it is going out of my pocket, negative. So these are the operating activities, main operations of the company. All right. Now, investing activity, all the activities connected to the investments of a company. Means if company is doing some kind of investments. So if these are in red color, means purchase of some machines. Means I have some extra money in my hand. What can I do? I can use it for expansion. So I am buying new machines, new equipment. I am buying land or building, right? I can invest in non-tangible securities as well. That is shares, bonds, FDs as well, right? And I can do any other investments from the surplus. So I am having some extra money. So I am buying or investing something, a fixed asset out of that, right? Now, since it is going out of my pocket, so it is red in color. If the money is coming in, the money is coming back to me. So it means it is green in color. So it will be positive. But for this, I have to sell these things. So if I sell machine, if I sell shares, bonds, then the money will come in. So over here, negative is also not bad and positive is obviously very good. So it doesn't mean that if this is negative, it would be bad. It is also good because I am investing my money. If it is positive, means if money is coming to me, I may be in need of that money. That we have to check. What is the requirement of that money, right? If I am selling my assets, so that could, you have to see is the company is facing some bad time or just I'm going to buy invest it somewhere else. So I am changing the investment decision. That's it. So negative is not a bad thing over here. One very important factor over here is that operating activities should always be positive, guys. Means investing activities could be negative, could be positive. We don't have to worry about these things. Both are good. Negative and positive, both the signs are good. But in operating activity, if they are negative, it's a complete red flag. No, in equity research, if operating activity comes negative, it means you should not invest in that company, or you should do some more research before you invest. So if I give you a very easy explanation to this, that would be being a teacher. If I don't earn any money from teaching and I am managing my day-to-day expenses from maybe stock market or maybe some another thing, so I can't say myself teacher if I can't make profitable earning from this profession, right? So to so for this, operating activities for a company should always be positive. Means till now what we have learned that the operating activity should always be positive. Investing activity could be negative, could be positive. If it is positive, it means I am spending my money, I am investing my money somewhere, or if it is negative, I am liquidating my money. So I have to see why I am liquidating the money, that we are going to check in a short while. Now, financing activities are activities connected to raising money. If I need some funds for my business, how can I raise it? Either by equity or by debt, by loans. So green color means, I am raising money from equity. That money is coming to me. I am issuing either maybe IPO, maybe FPO. So from equity, if money is coming, that is money is coming in, means I am adding the money. So it is green in color. It could be loans and debt, right? So again, I'm taking money from some time. So from somewhere, it could be banks, it could be my friends. I am issuing bonds and debentures as well. Debentures are also just kind of bonds, guys. So I am raising money from them. So what is happening over here is that, guys, I am trying to raise money for my growth, or it could be for any reason. But if it is negative, means red color means negative over here, or it could be I am paying back the money, I am repaying back the money, or I am giving the dividends. So, guys, if a company is giving dividend, it's a thumbs up. So, if a financial activity is negative, so we have to check whether the company is repaying the interest on the loans or whether the company is giving dividends. So when we click on this plus sign, so it will get expanded. So see over here, it is dividend paid. So negative means it's going out of my pocket. So if a company is paying dividend, it's a good sign. It's a good sign that company is distributing the profits. So it's a thumbs up. But if company is not paying any dividend, right? And companies taking borrowings, means company is repaying the borrowings, means company is paying more and more interest. It's not a good thing. Why? Because otherwise, being investor, you will be investing your money in a company, right? And company is using that money to repay the interest, or companies earning more profit, but companies using that profit to repay the interest on the loans. So again, the profits are misused. Your money is being invested is also misused. So the thing is that you have to see whether it is repaying the loan. Sometimes repaying loan is good, but if the operating cash flows are positive, if they are also negative, and this is also negative, it's not a good sign. And if it is if company is borrowing more and more, that is also a negative sign. We are going to see practically how what I want to say, right? Important point is that cash flow from operating activity must be positive. That is the only important thing that you have to see. All right. Now proceeds. Let's proceed further. So we had already discussed these things. Investing activities, cash inflow means sales of equipments, sales of investments, or collection of loans. I hope this is clear to everybody. Cash outflow means I am purchasing some assets, as simple as that. So investing cash inflow when I'm selling my assets, and outflow means I'm buying some assets, as simple as that. Okay. Now financing activity, cash inflow means I am issue some equity or I am taking some loan. Cash outflow means I am repaying the loans, right? Or I am giving the dividends. Loan is a different thing. Dividend payment is a good sign. All right. I hope this is clear to everybody. Now, I want you just few takeaways, whatever you have studied till now, and we'll go to practicals. Negative and positive sign, it's not that positive sign is good and negative sign is bad. We have to see the situation why it is happening, right? So it is dependent upon the situation. Sometimes negative in investments, if it is negative, it's a good thing, but the negative in operating activity would be a bad thing, right? But I want to say, if operating activity is negative, it's a red flag. You should never invest in such a company. But if investing activity is negative, it's a good sign. Means company is using the money to invest somewhere. Just like you are earning salary and you're investing your money in stock market or bonds or FDRD, that's a good sign. So this negative is fine, but this negative is not acceptable. Similarly, financing activities, if they are negative, so we have to see whether it is repayment of bond, a repayment of loans, or it is whether the company is giving dividends. So we have to see that. So if negative financial activity is there, it could be due to interest payment, not good. That again we have to see, right? If it is negative because of dividend, it is a good sign. So it's a thumbs up. So if company is not investing adequately or regularly, then again it's not a good company because they are having a lot of money and company is not planning good investments. So investments is a good sign for a company. Means if company is investing its money somewhere, so in future they will get good returns as well on that investment, right? So sudden huge investments is likely a sign for increased profits in future. How? Means I earn money today, I invested in stock market, or after 2 or 3 years, I will get the returns. So again, for future, it's a good sign. So huge positive in investment activity is due to this investments. It could be good for future itself. What I want to say, if the investing activity is positive, means if this line is positive, it means I sold my shares. It means I sold my investments, liquidated my investments. So that liquidation could be for my growth, could be for reinvestment itself. So both the things can be there. So again, guys, it's not something that you should be so much worried about. Cash in hand is always a good thing, guys. More cash, it is better. Means if a company is having more cash in hand, that is good. So net cash flow, if it is positive, again good. If it is not, if it is negative, we have to see why it is negative. I hope this is clear to everybody. So if net profit, uh, guys, we can do one thing over here. As I told you, that cash flow statement is not the whole and sole criteria. We have to sometimes combine it with profit and loss statement. We have to sometimes combine it with balance sheet itself. One more thing I would like to see, guys. Sometimes what happens, cash flows in the cash flow statement, the cash in hand is much higher than the profits, means the net profit. So the reason that could arise over here is that maybe the customers had given advance payments to the company, or if the cash flow is low, but the profits are high. Means if the cash flow is less than the profits, it means it is on accrual basis. Means the customer has taken the product on credit and they're going to pay next year. So sometimes cash flow could be less than the profits because it is on accrual basis, it's on credit basis. Customer are going to pay maybe next month, after 6 months or 1 year. Sometimes the cash flow could be much higher than the profits itself of that year. That could be the customers might had paid the money in advance. So this generally happens in the companies who are into contractual jobs like highway building jobs, like for example GR Infra. It is a contractor to government. It makes highways, but government pays the money. The payment cycle is for 1 year or maybe 6 months. So they have good profits, but the cash in hand is less because profits are shown, but the thing is that government pays them money after quite a long time. So sometimes this anomaly do happen. So keep this thing in the mind itself. All right. Now coming to the next limitation of the cash flow. It's not a whole and sole criteria for deciding, but there are few parameters that you have to see. Why you have to relate it with other financial statements itself. So it is one of the step of equity research, but it is not whole and sole deciding factor for equity research. I hope this is clear to everybody. So let's start from a negative uh, cash flow statement. But if I had already opened this, let's complete this one first. So this was for Reliance, guys. All right. So in Reliance operating activity, is it positive throughout? Yes, it is positive. It means Reliance is earning money from its basic primary operations. It's a thumbs up sign, means it's a positive thing and it is growing thing as well. So it's a good sign. Now, investing activity is negative. So someone would get scared, sir, it is negative. We shouldn't be invested. No, it means company is earning more money and company is giving that money or using that money, utilizing that money to invest somewhere. It could be in equity, it could be in some real estate property, but it is a good sign. Means company is investing the earnings. It's a thumbs up thing. Now, financing activity. So financing activity is positive. Sometimes it is becoming negative, again positive, again negative. It means it might be company is repaying the loan, or it might be company must have given some dividends. So let's expand this one, guys. Let's first of all start dividends straight away. So have this company given the dividends? Yes, this company had given the dividends. It's a good sign. Dividends are always a good sign, guys. Or is it doing repayments for the borrowings? Absolutely. It is doing the repayments for the borrowings. I would like to say, guys, if the company is making profits and company is also uh, repaying the interest on the loans or trying to recover the loans, it is a good thing because company also wants to get away from the debt. Debt is not good for the company. So companies tend to repay the debt and get uh, to the position where they can take the loan again or they can make their debt at zero position. So it is again good for the company. So all the companies are willing to do that. What the thing is that if the operating activities are negative, that we are going to see in Kingfisher. Let's open for Kingfisher, guys. You will have a better clarity. Means if a company is bad, so what are the parameters that arises over there? So this is for the Kingfisher, everybody. Now let's open cash flow statement. The first red flag straight away seeing this cash flow statement, that would be the operating activities are negative. So as I told you, the first line should never be negative. The operating activity should never be negative. It means the Kingfisher company, it was not earning money, not earning cash from its operational business, that is for flying, that is from airlines. It was not earning money and it was in negative. So they were not having cash in hand, especially from its own airline business. I hope this is clear. So it's a complete no. We should never invest in such companies. I hope this is clear to everybody. All right. Now, apart from this, were they investing? Okay. But the thing is that they were not investing regularly. Yes, they were investing. But apart from this, rest of the time it was positive. It means they were taking the money. It could be they were selling their investments. They were liquidating their investments. So this statement could be this central line investing activities could be considered as a good thing or a bad thing because it's on average sometimes positive, sometimes negative. But straight away it's a complete no just seeing the first line. Now let's see the last one. Financing activity. It is throughout positive and it is increasingly positive. Huh? I mean, it started from this and this and this and this and it was increasing. It means company is taking more and more money. Now company, let's see how it, let's expand it. So let's see, are there any dividends written over here? No dividends. So it means company have not paid any dividend. So company, proceeds from the borrowings. So let's see. So is it try to borrow something? Absolutely. The borrowings are increasing. Means company is taking more and more loans. Again, it was a negative thing. Company was repaying the loans, not as compared to whatever it was taking. If it was taking 600 crore loans, it was just giving 300 crores back. So though it was trying to pay it back, but at the end, just see over here, guys, I want you to have a look over here. The borrowings went up to 2000 crores, but the repayment was just 170. Just see the difference between these two. So it really went very, very high. So again, it was a negative flag. So what I want to say, we have to see, there were straight away red flags in this company. So we shouldn't be invested in such companies. That is why I always show you two extremes, one a good company, another a very, very bad, financially bad company. So this was not a good sign for investments. I hope this is clear to everybody. Now let's see one more uh, negative company. Network 18. So let's start from the cash flow statement itself. So over here, this is the first line, and I told you that operating activities should never be negative because it should always be positive because it is their business. So over here, the first line operating activities are having so many negatives. See, so again, uh, it's not a good sign to have, right? Secondly. So the second line is negative. It means they have quite managed good in their investments. So it's a thumbs up. But the first line is complete no. So if this is negative, you need not to see the next two lines itself. If the operating activities are negative, just straight away cancel the investments. You just not need to see the other lines, but still we are studying in this class. So second line, still investing activities are negative. It means they were kind of investing. Now financing activities. Now let's see. We need to see where they were taking the money from. So dividends, were they paying any dividends? No. Zero, 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 zero. So dividends were zero over here, right? So proceeds from the loans. So for it increased was uh, earlier it was they were doing good, but as eventually time passed by, it increased. So the thing is that they were trying to take more and more loans. They were not paying anything in terms of dividends as well. So seeing it in a wholesome way, so it was not a good company to invest. Just seeing this cash flow statement, we can straight away determine that they were not in a good shape. So if I compare it with profit and loss statement, guys, so you can see over here, the expenses were exceeding the sales. So operating profits were in negative many a times. So as I told you sometime, if it is negative, if it is positive, it's a fluctuating sign and it should not, you should not invest in such kind of company. So operating profit margins were also in negative. So straight away you can seeing this thing only, first two lines and combining it with cash flow statements, you can straight away, make your mind that it's not a good company to invest in. I hope this is clear to everybody. All right. Now let's see some good companies there as well. Dr. Lal Path. So Dr. Lal Path is having good growth for last many years, especially post-COVID crisis. It did well. So operating activities. So you can see over here, guys, they were having a positive cash flow throughout. So it's a good sign, as I told you. So investing activities negative throughout. It means they are investing their money. Means they are using the money to invest somewhere. So again, it's a good sign. Means they are using the money in a good way. Financial activities negative. Now I have to see why it is negative. Is it for the loans or is it for the dividends? So see, they are paying the dividends. It means they are distributing the profits. Good sign. and they're trying to repay the loans as well, but the loans are quite low. So for this, we can see over here what are the debt on this 100 crore debt is fine, and it's not too high debt, right? So if I tell you guys, overall, the thing is that they had maintained all the things in a good way. So it's a good cash flow statement. So you have to see, how the other financial statements, when we add profit loss statement with balance sheets, with cash flow statements, so it's a good sign. For example, the profits were increasing throughout, operating profit margins were also good. So if I scroll down, the reserves were also increasing throughout in the balance sheet, right? And equity was much higher than the other liabilities. See, equity is higher than the liability. So debt to equity ratio is also quite managed, right? So overall, the current assets and the current liabilities, they are also quite managed. For that, I need you to see the money control website. That is good for this. I hope this is clear to everyone. So cash flow statement, you can say it is a confirmatory thing. Means if the profit loss statement and the balance sheets are already good, the cash flow statement would be good. But you will straight away get to know just seeing the profit and loss statement. You need not to waste time going to balance sheets and going to cash flow statement. You can catch many companies here only. But still, if you want to see, second thing, you can see the reserves and surpluses. Straight two lines. You can straight away get to know whether the company is good or not. If still you want to go deep into this, then you can add further, current ratio, as well as you can use debt to equity ratio, and then you can go to cash flow statement. But if a company is good, you can straight away evident. It will be straight, it will be evident straight away that yes, it's a good company to invest. It's not a good company. And if it is like shades of gray, then it's quite ambiguous. So I want you to just quit that company. No need to invest in such companies. I hope this is good to everybody. Now coming to Deepak Knight, right? Now coming to the cash flow statement, guys. So the cash flow statement was operating activities. It was positive throughout. All right. The investing activity negative. It means they are investing throughout. So they are good. They are utilizing their profits. They are utilizing the cash in investments. It's a good sign, right? Now, financing activities, sometime positive, sometime negative. So let's see, have they given any dividends? So dividend payment is okay. Fine, they are trying to pay the dividends as well. Repayment towards the loans. Absolutely, they are trying to overcome the debt, whatever they are having. So if the company is having good profits, guys, and they are trying to repay the debt, see profits were good in profit loss statement, right? And they're trying to repay the debt, it's fine. So as I told you, in the previous classes as well, debt is not bad until and unless you are making profits, until and unless there is no macro level negative event going to happen. If you are having good revenues, macros are also good, then debt can can really help you in expansion. Really, you can expand in a big way. But only there are only two parameters. One, good revenues, good sales. Second, macro level activity should also be good. If anything falls, debt can collapse. All the big companies, they collapse because of debt itself. So debt you have to keep in mind whether it is a good sign, what is happening in terms of the macro level, and what is happening in terms of you can say in terms of the revenues. So one of the most famous companies is Zomato, right? So we had already seen its profit and loss statement. The net profits were always negative, though they tend to improve a lot now. Now, if I told you, as I told you, the first line operating activity cash flow is negative throughout, guys. So again, it's a second nail in the coffin that it's a red flag that operating activity should never be negative, right? Investing activity was positive, negative, it's fluctuating, means you can make out that they are trying to invest somewhere, that's fine. Now, financing activities. Now let's see about financing activities. So I can't see any dividend over here, and they are trying to repay the loans itself, repayment. They're trying to, no, they are not trying that much to repay the loans. Now, the thing is that over here is the thing that you should be concluding then because of this negative thing, because of the negative operating activity, it's a it's not a good company to invest in until and unless they tend to become positive, at least in the cash flows. Because guys, it is just everything right now is going fine. But just imagine, if something wrong happens, at macro level and people stop eating food or people stop ordering the food, all of a sudden there will be huge pressure on this company, huge pressure to sustain. And if they are having huge amount of debt, it will become very difficult for them to sustain for long period of time. And they are having good amount of debt as well, 1,000 crore rupee debt on them, right? So you have to take care of this thing as well. All right. Now, Coal India, it is having good financial condition. There are very few PSUs which are having good financial conditions, guys. So Coal India is having quite a huge number of positive cash flow. Means in terms of operating activities, it's doing good generally, right? And apart from this investing, it is negative and positive sometimes. So they are investing their money as well. So it's a good sign, guys. Now, financing activity. So it is negative. So let's see why it is negative. So uh, they are giving huge amount of dividends. See. See, guys, the PSU companies are basically very famous in terms of giving dividends. Why I'm saying this? Because people don't invest in these companies for capital gains. Yeah, capital gains are also part of that, but they don't give that high capital gains. They are good for dividend parts. So many people they invest in these companies just for the sake of dividends. But if you ask me, dividends should not be the whole and sole criteria for the investments, right? It is only the capital gains because to earn substantial amount of dividend, you have to invest a lot of money. For example, if you are investing, if you expect around 1 lakh rupee a dividend, you need to invest at least 25 lakh rupee. I mean, just for an example. So to earn 1 lakh substantial amount of dividend, 25 lakh rupee you are investing. And that too, you will not get any capital gain. So instead, you invest that 25 rupee in some another company, you might have got better returns, right? So over here, I would like to tell you that promoter of this Coal India is President of India. So it means government is the promoter, and 66% is the holding of the government over here. So let me, add this thing over here, guys. This is also part of fundamental analysis that you don't have to take it so seriously, but whenever you are investing in a company, just scroll down and have a glance of this. I want you to have a glance on a governance in a company itself. Now, governance of a company is very important. How? Let me tell you. Let's take an example between India and North Korea. In India, if Indian governments needs to take some decision, they first need to uh, make a bill, then they have to present that bill in the parliament. Then Lok Sabha and Rajya Sabha, they both has to pass that bill. If not Rajya Sabha, then at least Lok Sabha should pass the bill. Then the bill goes to President of India. She or he is the last one to approve it, and only then the bill get approved. So just for one single decision, there is a long process. It takes a long process. Sometimes the decisions are not taken because of that long process. Second way of doing things is there is only one person who is the deciding man. Then in North Korea, that is Mr. the she Kim Jong, right? He is the only guy who decides. So over there, if he wants to make a rule, he can make a rule or law any point of time because he's the only one to decide. He no need to ask anybody. So there is a difference between when the promoter shareholding is high and the promoter shareholdings are low. Means if the promoter shareholdings are high, it means the decision making would be fast, right? And if you had started a business, you will start a business like a baby. You will take care of that business like a baby, right? So what will happen over here? You will be the only person who will understand the business the best way possible, right? So even if if someone, if you say ki, sir, if you give the charge of the business to your friend, to your family member, or some distance person, that person will not be connected with the business. And if you hire a manager for your business, right, that manager would be working for the sake of salary. If someone else would give a better salary, he will switch the job, right? So he's not attached to the business. But I want to say, higher the promoter shareholding, it is better for the investments. So the companies which are having the promoter shareholding more than 50%, it is considered as good companies in terms of investments only, not in terms of decision making, other protocols, management things. in terms from the viewpoint of an investor, if I am investing in a company, that company should be having more than 50% stake in the hands of promoter, because it's the promoter who will understand better what kind of company that is, right? FIIs are foreign institutional investors. These are the foreign institutional players who invest in the companies, right? Or in the stock market, or they can buy the shareholding of a company, right? So there is a difference between FDI and FII. FIIs, they invest in the companies in shares, right? FDI, on contrary, they build their companies over here. For example, McDonald's is an FDI. They came here, they started their showrooms. Now people started eating over there. So that is FDI, foreign direct investment. Samsung coming here, starting a plant over here, that is FDI, right? Tesla, that would be coming here, starting manufacturing unit here, that is FDI. But if a foreign company investing or buying shares within a company, or shareholding within a company, or investing in stock market, that is FIIs, right? DIR, domestic institutional investors. Similarly, there are many companies who invest, who are these are domestic companies, Indian companies who invest in Indian companies, right? So it could be any company, like it could be life insurance, LIC, SDFC, it could be AMC, asset, all the asset management companies can be part of this. I hope this is clear to everybody. Government is also part of that, guys. Government also buys shareholding. So there are many government organizations and many government things which invest in companies, right? And then public people like us, we also invest in companies basically. So what I want to say, in management, promoter shareholding should be highest. If it is highest, it's good. But there are companies who don't have the promoter shareholding, like ICICI. Now I would like to give you an example over here. See, over here there is no promoter shareholding. It means there is no one man who is handling. So who is handling the day-to-day decision making? Some FIIs, some DIIs. Means I have appointed few people, board of directors, from the on the behalf of FIIs, on the behalf of DI, domestic institutional investors, government and public as well. So few people, 10, 12 people together, they are making the decision for this thing. So if majority votes, so decision will be taken. If majority doesn't vote, decision will not be taken. So it means there will be delay. And the board of directors, they will retire, they will change the jobs, they will take leaves, they have family to take care of. So who is better in management of a business? Is it a promoter or board of director? Definitely promoter. Owner of the company will take better decision for the company. Instead, board of directors who are just gathering of the people who can change jobs, who can fall ill, who have uh, more priorities, uh, who have priorities other than the other than the business. For example, family, changing jobs, higher increments, so they can change the jobs. So what I want to say, shareholding pattern for an investor, it is important that the promoter shareholding should be high. I hope this is clear to everybody. Now coming back to cash flows again. So you have to combine cash flow, and you just have to have a glance on this thing as well, management part of the company. Now, Castrol. Castrol is also doing good as such. Castrol India. Mm, Cash flow statement. So over here you can see the operating cash flows are positive throughout. Okay, it means they are earning good from the operations. Then comes the investing. So investing, they are investing, sometimes they are not. So this should not be a matter of concern. Financing activities, it's negative. Now let's see why it is negative. So have they given some dividends? So they are paying dividends quite regularly. So that's why it's negative, guys. So it seems like it's a good sign. Now let's combine with the profit and loss statement. So seeing the profit and loss statement, the profits were consistent. Operating profit margin was around 20 to 25%, right? Balance sheet, reserves, yes, the reserves are also increasing. So it's a good sign as such, guys. And one more thing I would like to say, the book value and the current value, market value, it's not that, the difference is not that high. No, it is just 180 rupee, and debt is also quite low. It's a good sign basically for a company. Means we have to find fundamentally strong company. Fundamentally strong company means good financial statements. All the financial statements, whether it is profit loss statement, balance sheet, and cash flow statement, all these statements should be good, right? Apart from this, when you use ratios comparison, so it should be better than the peers or competitors, right? And when we see the valuation at the end, when we use the technical charts over here, so it should be, it should be undervalued or par valued at par value. It should not be overvalued. So over here, it seems like okay, right? And return on equity was around 42% over here, and ROC is around 56%. So this is what I wanted to say. We have to combine all the parameters together for the better clarity over here. I hope this is clear to everybody. All right. Any doubts till now? Let's see one more company, HDFC, AMC. So operating activity, is it positive throughout? Yes, it's positive throughout. Investing activity, is it negative? Yes, it is negative. Means yes, they are investing whatever money they're making. It's both are good signs. Financing activity, okay, sometime negative. Okay, let's see why where they are using. So dividends are negative. It means yes, absolutely, they are using, they're paying the dividends, they're sharing the profits with the shareholders. So it's all these things are a good sign, regardless what is the net cash flow. But overall, if you see, it is a good sign for a company. All right. Now, the thing is that over here, the promoter shareholding over here is also 68%, more than 60%. Again, it's a good sign, right? For a company, it should be, if the promoter shareholding is more than 50, you just have to see it. You just have to glance it. It's a good sign for a company. And overall, if we see that, where is the profit loss statement? Were they making good profits? Yes, the profit margin was very high over here. So see guys, it is a good sign for the company to go ahead, right? For an investor, it is a good sign. So cash flow statement, how it works basically, cash flow statements, they give it acts as a confirmation tool. Means for a profit loss statement, for a balance sheet, it acts as a confirmation tool that whether you should be going ahead or not. And all the most important thing is that how the company is using the cash flow statement. One more important role of cash flow statement is in DCF model, discounted cash flow model. Whenever we will be, making future prediction models in financial modeling, for that cash flow plays a very important role. Over here, we will be calculating cash in hand, free cash flow. So over there also, cash flow plays a very important role. I hope this is clear for you. Now, I would like to give you one last example over here, and then I will give you a homework as well. So, ITC. ITC is also a very famous company, you all must be knowing it. So, when I click on investors, I wanted to see, pause the video and see, is there any promoter over here? Is it so? Yes, no. If no, who is handling this company? So, do you think board of directors are handling this company? Okay. So, this is a homework for you guys. So I want you to see the shareholding pattern in the ITC. So take it as a homework, everybody. All right. So I hope this is clear to everyone how the things work out in stock market. And today we completed the financial statements. So fundamental analysis, it is important that we combine all the financial statements together. And the ratio analysis also comes with that, and then we apply technical analysis. So sequence is like, first we go for ratio analysis. From ratio analysis, I will shortlist 2 or 3 good companies, and for those 2 or 3 companies, I will try to relate it with the financial statements. Once I will find good financial statement, means the company is fundamentally good, intrinsic value is good, then only I will apply, then I will keep the companies in a watch list. Then I will apply technical analysis, that when should I buy the company. Technical analysis will give me a good entry so that I can make more profits. Once that part is done, then I will go for, then I can buy the company, right? Now, if I'm going for very long period of time, 10, 20, 30 years, then I will do future prediction using financial modeling. So financial modeling is also part of future predictions, and it will help me to predict what is going to happen in the company. So this is how the entire sequence works. So over here we studied macros, we studied fundamentals, we will be studying the technical analysis itself. I hope this is clear to everybody.